Good morning, everybody. Today is Thursday, March 14, 7:56 a.m. Eastern Time. PPI, Jobless claim, blah, 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 blah. Some, important macroeconomic data that will be released soon at 8:30 a.m. But anyway, let's start to review what we had in the structure, left in the structure yesterday, and what we have right now. So I have been saying, the volatility skew showed us a pullback yesterday and spike today and tomorrow. Tomorrow is the OPEX. So we have a bullish SMIC so far. So also up to the end of the month so far, the volatility skew is showing us a bullish SMIC. So per volatility skew, 5,165 is the support, 5,107, and this is the resistance. Break 70, calls supposed to be paid off, start to be paid off, and breaking down 65 puts start to be paid off. I also explained you guys about the volatility skew curve yesterday, if I'm not wrong, morning call video. So let's compare what we have right now. Give me just 1 second, because my computer is a little bit slow. Hey, sorry everybody, so I think it's getting low right now. Let me get, the current volatility skew to compare. So the volatility skew, let me put in the screen that I'm presenting, is still the same, didn't change anything. So we don't have divergence between what they left yesterday and what we have right now. So volatility skew is still the same. Of course, during the intraday, this could be changed. That's where we, be able to discover, tops and bottoms. Anyway, something that I highlighted to you guys that we have been seeing since December, and I have been highlighted that we are in a distribution. So markets start to be really dangerous, and I'm still seeing people that don't really care. People still buying calls without any fear, right? But remember, distribution means assets, risky assets, is leaving from one hand and passing for other hand. The other hand nowadays is retail. And I always highlight to you guys, don't be the last one to turn it off the lights. Okay, but so far the trend is still going up. Okay, I don't want to surf the trend anymore. I already did, because I'm not a Nazaré surf. To surf big waves in Portugal, Nazaré, you need to be brave, a lot of brave, and I'm not this guy. I like to surf normal waves in Rio de Janeiro, in Miami, that have like small waves. So I want to surf, until I can afford. Big waves like Nazaré, I cannot afford, right? So market distribution, I have been highlighting this to you guys. As soon they remove liquidity, as soon GICs start to print at 44 or less than 44, as you saw the big drop over here, we have been seeing green days. As soon they start, as soon they remove, we start to see a green days. As soon we spike, we have been seeing red days. They add the liquidity because somebody wanna leave. And today, again, the DIX remove a little bit, not something very significant, not seeing something bigger, but usually drop liquidity. We have VC market is going high. It's going right. It's a good setup for a squeeze. Okay, GIX is still very high, means volatility keeps suppressed, means that is a very controlled sell-off. I know that somebody, even you guys in the group, somebody didn't believe in me, right? Everybody's still bullish, everybody still believe that we will not enter in a recession, everybody still believe that the Federal Reserve will support this ad eternum. Anyway, regarding deltas, what you saw, yes, the overall delta at the close was totally bearish, very divergence with the volatility skew. I also explain you guys about volatility skew because during the intraday the volatility skew was bearish, means bringing a lot of premium to put calls and reducing the premium from the call contracts. Consequently, what dealers do during the intraday, reset up, sell premium, buy, use the market money to be long and generate gamma squeeze. You guys have been seeing this since December. So overall delta was bearish, 5,200 is a big negative delta flow. Okay, 5,150 is still the key support, the worst case scenario, because if you break down 5,135 tend to be print. That's what you saw, what they left in the book. They basically, in my humble interpretation, they build their book for a squeeze. Note for gamma design, they remove, higher gamma, start at 5,075 up to 5,195, is lower gamma, making the book easy to break up. Of course, the plus GX is 5,200. So intraday became a magneto, and 5,170 is the plus GX intraday that we could, since so far futures suggest that we open above, we could consider this is a support. Worst case scenario for me, according delta, is 5,150. According gamma, 5,120. But before 5,120, we have 5,135. That's the most bigger defense, right? And the minus GX at 4,430. 4,535 is the same level as you have over here in delta flow, positive delta flow, defense. Okay, I also give you guys a highlight about the book. Okay, let's compare the delta and the gamma flow, what we have right now. So the delta flow is still bearish, negative. So we have like a divergence with the volatility skew, right? Still, the 5,170 before was a support, was a positive gamma, now is a negative gamma, and we have negative gamma below 5,170. For me now, according yesterday, so 5,170, suggested as a support, open above, right? As I said before, and defense 5,135, but worst case scenario, in my humble opinion, 5,150. Anyway, now we have negative jacks at 5,170, right? So the gamma is showing a lot of divergence comparing the volatility skew. Again, for me, the market is set up for a squeeze to go all-time highs today and tomorrow. So the market participants sentimental is totally bearish, not bullish as somebody have been commenting, because the flow is bearish. No, how come the sentiment is supposed to be bullish if in general people have been buying negative deltas? So in general, the market participants sentimental is totally bearish. Okay, so 5,170 we could consider, since you future suggestions, gap up at the open. So we need to look for 5,170. I told you guys yesterday in the closed group that looks like they set up 5,163 as a floor for today, per the orders that print in the book yesterday. Okay, per the order that print in the book yesterday, you know, the setup looks like 5,163 is the floor, and 5,200 tend to be tested. Okay, but we need to look for the downside targets. Again, 5,150 is still, for me, very important level, and is still for me the worst case scenario. And the current gamma is still showing 5,135 as a worst case scenario, because it's as no, not more 35, more like 45. Now 4,145 looks like that worst case scenario is because the first level that we have positive delta flow and we have negative gamma flow. That's where we start to see divergence. So supposed to be a defense by the dealers. Anyway, if you break 45, 35, okay, break down 45, 35, but the levels didn't change too much. So let's go back to the market wrap. So according to the book, look, the higher opening interest that we have yesterday in the higher volumes. So as I told you guys, I show you guys a lot of divergence, especially at 5,200. So for me, it's an easy setup to see a break. Okay, and also same diversion at 5,107. Consequently, same setup and very easy to see a break, because a lot of people bought puts in those strikes, and yesterday those strikes were positive gamma, and for me, consequently, it's a setup for a squeeze. I could be wrong. My read could be wrong. I'm just showing the setups. So the summary that I told you guys is a possibility to backtest 5,200. So the volatility skill support 65, resistance 5,170. We don't have too much gamma, to defend markets above 5,075. So 5,200 tend to be a magneto. Breaking up 5,200, so we could be backtest 5,210. Lower jigs, remove liquidity. Usually we see in green days. I put everything in the summary, and I also highlighted that higher PPI, higher jobless claim. I know that the market is selling a propaganda that if you see lower CPI, lower PPI, you see markets is going up, and the opposite, the market is supposed to be going down. But as I told you guys, the real return, the cost of the money is not showing us this. Higher PPI, higher CPI, the money is getting much more expensive. Yeah, so consequently, everything is going up. And also, risk assets. Okay, so my humble opinion, setup is to markets do a new all-time highs. Markets back test 5,200. Okay, so let me close the market wrap. We already review also the flow. So let's talk about very fast about like Bitcoin. I told you guys, greed kill demand. Greed, destroy families. Because, everybody look to be rich from one day to another. I explain about the Bitcoin. Bitcoin is the only asset that is providing for those that bought top back in 2019, are profitable in 55%. Fab is not, why? It's more than 100%. No, it's not more than 100%, because the cost, the Bitcoin, the real returns of the Bitcoin, Bitcoin is supposed to be trading above 45,000. okay, above 45,000. So we are 55% of the real cost. Okay, so SP500, that's a index that's not paying premium so far, because the cost, the real return, for SPX, if you bought at 3,500 pre-COVID, SP500 is supposed to be trading at 5,250, right? So SP500 so far is not paying any premium, but Bitcoin is paying 55% so far. So if you guys see a meltdown up to 45%, something totally possible, because the level of leverage that people are, that's totally possible to see a flush. And if you see a flush up to 45%, it's still profitable, because the real return is showing that the Bitcoin is profitable if you be trading above 45K. So it's possible a meltdown, right? I know that I have been seeing this a lot. In 2020, the pump of the cryptos, the same lazy eye said, oh, now I'm seeing Bitcoin going to $1 million. Oh, this leg Bitcoin go up to 250,000, $250,000. And then, as soon Bitcoin started to went down, they came and said, now Bitcoin go up to 100K. You guys have been realized they have been saying the same fucking levels all the time, same prediction, same persons, same propaganda. Didn't change anything. The target is still the same, right? Target is still the same. I'm not saying that you're not going there, but every bull market has a hype. And the current hype is cryptocurrency. I'm not saying that cryptocurrency go to zero. I'm not saying that crypto is gone. But we had a bunch of hypes. Silver hype, gold hype, now Bitcoin hype, Tulipa hype, innumerous hypes. And none of them reach the targets that everybody call in their hype. Okay? Even gold. We have a nice book, I told you guys before, is from gold or from Tulipa up to Bitcoin. That's normal. Market bring, something news for market participants to invest. Every time have a hype. Every time have a hype. I know that you guys have been explaining regarding the Bitcoin going up and Bitcoin miners going down. But doesn't make any sense for me the explanation, because if you check MicroStrategy, like if you guys check MicroStrategy is doing the same, movement that Bitcoin is doing. So if you guys telling me that, people have been moving to ETFs and selling money, so why MicroStrategy is going up as crazy? Nobody explained me this. So MicroStrategy became a Bitcoin ETF? No, right? But they have a lot of Bitcoin. They don't have zero Bitcoin. They are totally leveraged. They are more than 100% leveraged. So they don't have any Bitcoin. They're using Bitcoin as a collateral. As all the regional banks that failed started back in 2020 did. As FTX did. So this is just one more company doing the same mistake that others already did. I want to highlight as well that, this company, this guy is a very, very risk for cryptocurrency investors. Because the amount of the Bitcoin those guys hold, and if they start to sell off to pay their loans, if crypto start to collapse, everything tend to collapse, right? You'll be totally different than FTX. You'll be totally different than Silicon Valley Bank, regional bank, right? Because this guy is really big and really leveraged, and he doesn't have any plan to sell such assets. That's a guy that built a big propaganda that fiat will be gone and cryptocurrency will be the new future. Remember, I like to tell everybody that Bitcoin is just a technology. Bitcoin is not money. It's just a technology, and technology change a lot. Look at companies like Xerox. Xerox build the internet. Xerox build the Windows operation system. Then Microsoft make a evolution, and now the Windows operation system is associated to Microsoft, right? So Xerox became an outsourced company, a printing company. Technology change. Technology change. As I explain you guys, profit is good in our pocket. Okay? Think as a CTA. You guys will not be rich through Bitcoin. You guys will not be rich, buying and selling calls. You guys will be rich with your work and investing correctly to protect your heritage, to protect your buy power. Okay? But you guys will be wealthy with your work. Okay? Remember, risky assets, those that invest in risky assets, basically you guys work in the stock market. Because if you buy risky assets, buy and hold, in the long period of time, you'll be not profitable. Just check Disney, just check Boeing, check the majority of the companies. I give you like also, a tech companies like Roku. Apply the real return when the price that you bought the asset, and bring to the current price and see if they are profitable or not. If they are not profitable, you're not making money. You're losing buying power. Right? You guys understand? I explain you guys about real return. Guys, opportunity to be rich happen 2 times. One, you have a crash, and one, you see a bottom. Of course, when we have a crash, you'll be rich faster and furious, but you take a lot of risk because nobody knows the time, right? Nobody knows the time. And if you keep it short and you don't have infinite money, the probability that you bankrupted will be higher than you be rich. The second way to be rich is to buy bottom. Because when you enter a recession, when the cost of the money go to zero, everything go to zero. And if you have enough cash, you can buy as much as possible. And then you can buy and hold. Especially companies that you pay high dividend. So you build, a fixed income portfolio, for example. You can buy real estate cheaper. You can buy fixed income cheaper, right? And then also you can buy grow tax cheaper to look for going up. Those are the 2 lifetimes opportunities. a crash and a bottom. Okay? The easiest one is a bottom. The fastest one, but the difficult one, is a top. I told you all my friends that if you short MicroStrategy, if you short NVIDIA in the exactly time, you'll be rich. Because the implied volatility for those assets is really high. And as you guys see, for example, NVIDIA is already profitable 100%. The correct price of NVIDIA for real return is for 470 something that I told you guys before. So if you see a spike back, up to 4,700 something, NVIDIA is still profitable. But if you enter in a recession, NVIDIA could go back to 74. So look how big could you be the drop. I cannot predict the future because I really don't know if you enter a recession. The environment looks like that we will. And also, the treasury lady, the liquidity lady called Yellen is also calling a crash.